Okay, everybody, welcome to week 40, 2025. We've got a few markets that we're going to look at here for our picks of the week, the first one of which is going to be the Dow Jones Industrial Average. Now, the Dow Jones Industrial Average is an interesting market because it's by far the most famous index of them all, American index of them all. So when we talk about American stock market performance, most people begin the conversation with where's the Dow at. That goes back over 100 years, back to the early 1900s. Now, we're going to employ an interesting device here. If you're not familiar with Fibonacci time zones, we've made some videos over on How to Trade Calm YouTube. Go ahead and check those out. But a Fibonacci time zone gives you a timing mechanism for potential reversals in the market. Now, there's many different ways that you can use time zones. I'm going to show you one that's fairly simple. And what it is using the time zones from a key zone or a key point in time moving forward to try to project where we're going to get a reversal. Now, the biggest part of using a Fibonacci time zone is you have to know where to begin and where your one level is going to be. So right here, this pullback, that tariff panic of April, back in the first week of April, that's going to be our zero level. That's where we're going to start this time zone, and then we're going to go ahead and work that one level to our first significant pullback, and I'm going to show you right exactly where that is. So let's go ahead and click on our Fibonacci time zone tool, and we're just going to go ahead and roll forward in time. We've set our our 0 and our 1 level. Now, our 0 level is going to be that big pullback in April coming off of those yearly lows from the tariff panic. And then our first time zone there is going to be this pullback right after potentially this swing high. So we're doing this in retrospect so you can see exactly what we're looking at next. Remember, Fibonacci time zones are designed to be forward-looking and actually indicate where you may, in fact, get a reversal. And as you can see, we haven't got really a significant reversal off of any one of these time zone areas. So right there would be sort of your first pullback that occurred in May, and then we sort of went higher. We were thinking maybe we get a reversal there. Nope. We went higher. Then we got a little bit of a pullback, but more compression. And then by the way, our 4 level, we're still going higher, and now we're just grinding north. So for me, I'm not looking for a market reversal probably until early November, right between that October Fed meeting and the December Fed meeting. That may potentially give us an area where we would get a pullback ahead of the holidays. I'm not looking for that until then. Right now, the key level, 47.5 for the Dow Jones Industrial Average. Let's get over your switch markets terminal here on your MT5 platform. So a couple of things that really stick off the chart to me. Number one is this high that was established just a few days back, and that's right up around 46,764-ish. Beware of that level. Probably mark it on your chart. I don't believe there's any real significance to that level. I would be looking at definitely 47.5 as being probably the next big area where you could get some natural resistance there. But still, it's a swing high. It's a spike high. A lot of folks would say that's a liquidity sweep. I'm not really in that camp, but I do believe that that is a swing high. So I would keep an eye on that as maybe being potentially short-term resistance, but I wouldn't get too carried away with that. The big thing I want to point out on this chart is our RSI, our Relative Strength Index. Now, we're not in overbought territory. We're just beneath 70. That's sort of key. That suggests that this market still has room to roam to the top side, and we haven't seen that big spike that's got us into that overbought territory where we would potentially be looking for a short, maybe with another indicator, a crossover or something of that nature. So we're not quite in overbought territory yet. I think between the Fibonacci time zones, our fundamentals, we've got really dovish Fed policy. That weaker dollar is going to lead potentially to market growth in risk assets, and that's what the Dow is. So we're watching this closely. Remember, the key market driver for this week is going to be U.S. non-farm payrolls on Friday. We have a pending government shutdown. If the government does shut down here in the United States, you will not get the NFP numbers from the Bureau of Labor Statistics. Be sure to check back to our live streams every day. You can check us out on X at How to Trade on X. I'll be giving updates all week long there. So you're definitely going to want to be checking that news because that's big. That's going to give us an opportunity potentially to not have NFP Friday. And if we don't have NFP Friday, we need to know when those numbers are going to drop. That's a huge market driver. Right now, bullish the Dow, looking at 47.5 maybe as a compression area, but really bullish the Dow until at least early November, according to these Fibonacci time zones. Silver is pretty much the biggest financial story out there right now. We've seen a major explosion here in September. We're up about 18.64. I mean, we're closing on 19%. This market just keeps going higher and higher and higher. Couple of things to remember here if you are trading silver. Number one, 50 is a big round number. That is an area of natural resistance. Have it marked on your chart. Understand where 50 is. Now, where this is a little bit different. Now, you remember we had gold. Gold forever, 3,500 was huge. Okay, that was going to be our area of fair value, area of topside resistance, natural resistance. It's a big round number. This one's a little bit different. 50 is the biggest, roundest number on the board for silver, no question about it. We're more than likely going to get some two-way action there. However, the all-time high is at 49.81-ish. Now, your number may be a little bit different on your charts, depending on your brokerage, but this is a good look at your spot silver market from Rwanda. That high right there, you're looking at about 49.81. So that came back in, April of 2011. That's key. That's right in the heart of that 2008 to 2012 financial crisis. The global liquidity crunch crashed the real estate markets, knocked a lot of people out of the market. If you want to hear stories about that or you have any questions about that financial crisis, hit up a live stream, ask me. I will tell you all about it because I was there and it was not good. It was not good. But we're looking at 50 really as being an area of maybe potentially natural resistance. The reason why we don't really necessarily want to be shorting aggressively there, I mean, I still say you could probably take a short from right underneath that level and probably pull some money out of there. You have to be very careful with that all-time high. Right now, there's a lot of institutions looking at that level. If it gets knocked out, we could potentially break above 50 initially. And if that is the case, then I want to buy pullbacks from 50. There are no rules on how high silver can go. One more time, there are no rules on how high silver can go. So definitely be aware of that. The top side of this, I've heard analysts call anywhere from $75 to $80 to $120, and I heard that just today. I don't know about any of that, but I know that if 50 goes, we probably are looking at 75. Don't know if it's this year, don't know if it's next year, but right now the sentiment is incredibly bullish. 95% of the people lose all their money fading trends. Don't get in the way of a strong trend. That's a strong trend. Be very careful if you're trading silver. Okay, I want to check in on gold here very quickly. What I want to point out here is just a basic 1 to 5 Elliott wave sequence and where exactly we can expect natural resistance. Now, 4,000 is a big round number. We've got trade ideas out over at howtotrade.com on how to trade this 4,000 level. Go ahead and check those out if you like. We've got an extreme bullish bias right now. The market just keeps churning higher and higher and higher, and there really doesn't seem to be any in its sight except for potentially 4,000. Now, from an Elliott wave perspective, there's a couple of things that you need to be aware of. Elliott wave can get as in-depth and as complex really as you want to make it. I keep it extremely easy. I really encourage you to keep it extremely easy too. It's a 5-wave pattern, what we're looking at right here. Now listen, 1s, 3s, and 5s are movers, 2s and 4s are retracements. So going back really to the beginning of this rally, the beginning of this breakout, 22nd of August, somewhere in this area, if you wanted to wait maybe and call the breakout on the 28th of August, that's fine. But even no matter what, you're going to be looking at a 1. This is a big extended 1 really all the way through the middle of September. So that's a nice big move. You'll notice that we didn't count this as a retracement because it doesn't really retrace, trades sideways and then breaks. So right there's your 1. This pullback right here is your 2. 2s and 4s are pullbacks. 3's a mover. There's your 3. You can see the nice big vertical move. There's your pullback, a 4. Nice pullback there. Then a compression, and now a break. You're working on a 5. So daily time frame, where are we looking for this market to go? 4,000. 4,000. Bullish bias. Shouldn't get any big-time resistance until that zone. Okay, everybody, that's week 40, 2025. Those are our picks to click, or our picks of the week. Dow Jones Industrial Average, still bullish. Silver is still bullish. Silver is really the story of the financial markets right now. Be careful up around that 50 level. Normally, I would say step in and short it with reckless abandon. Not so fast, my friend. Watch all-time high, 49.81. When that gets wiped, we could bounce over 50 just on momentum. Be very careful there. Now, as far as gold goes, we're looking at 4,000. If you want more information on a gold trade idea, head over to How to Trade. We put one out on Monday morning. That's a wrap, guys. Week 40, 2025. Have a fantastic day. Have a fantastic week. NFP Friday. Be sure to check back. If that gets canceled, we need to know exactly when it's going to come out. I'll have everything for you, everything you'll need to know all week long on our live streams. All right, everybody, that's a wrap. Trade well, and we'll talk soon. See you.